Joining us to talk more about this is Neela White, Senior Portfolio Manager at Blue Wing Advisory Group, Raymond James. Neela, thank you very much for joining us.
Thanks for having me today.
Let's talk about the 7,000. It's kind of a magical number. Went up above it briefly, but it just pulled back. What your thoughts on that little topping of $7,000 and then the pullback?
Yeah, when I look at what happened this morning, and we are seeing a teeny bit of a flattening or a pullback, I think the market's still driven by strong confidence in the AI theme. I think we're now also getting a trickling down of how is that AI stuff with the Mag 7 actually being distributed and used in other core industries and core sectors, healthcare being one of them. So I think we're looking at those two things, as well as, maybe from the U.S. side, they're looking for language when the Fed comes out at 2 o'clock, suggesting that maybe later on in the year there might be interest rate cuts if indeed there's not one today.
And now there has been talk of 8,000 by the end of the year. Is that if we see the rate cuts with that?
I wish I could prognosticate that. This is one of those days of, today's this, tomorrow's announcement might be this, and how is the market and momentum being driven along by that? So I'd have to say it's certainly a bit of a whiplash and mind-boggling to me.
But if we do see the rate cuts, I mean, most people are predicting maybe 2 or 3 rate cuts this year. Is that kind of baked in already, or would that be something that might spur the markets?
It might be something that spurs the markets, just because looking at our side, there has been none, and there may not be until maybe later in the year. So I think it would be spurring the market, making investors again feel, as they see prices move up, the fear of missing out, money moves back into the market, and we see it continue to go higher.
Now, and of course, I think a lot of people, it feels like today is kind of one of those wishy-washy kind of days. Everybody's just sitting and waiting for the Fed, and then waiting for the reports from Meta, Microsoft, and Tesla. Meta and Microsoft, I think, are the two big. I mean, Tesla's important, obviously, but those two seem like the ones that people want to see.
Yeah, and I think, it's been slightly down for most of the morning. And I think when we look at whatever's going to be announced at the close as far as earnings go, really it might be a waiting to hear what the language is and seeing if all of the money that has been put on in the AI spending, data center building, and all of those things, if it's going to be realized in their profit numbers. So I think it is for all those companies a bit of wait and see of here's how 2025 ended. What do we feel is happening for the rest of 2026? Granted, it's early days, but there is so much going on in the market. I think it is the feeling of is more going to be spent, and if so, does it actually materialize into growth and profitability?
And are you looking at that for the same thing for all of them, or are you looking at Tesla, expecting you want to hear certain things from them, Meta the same, and Microsoft something different?
A little bit. I think if I were to look at Apple as being one of them, I know that they had a delay on their update of Siri. So when I look at even the products online, Google Gemini, really neat product, Chat GPT and stuff like that, they have been a bit slow to the table with updating their software, but as well, they haven't spent as much. So that could be, it could be a negative because it slowed down their build out, but it could also be a positive because they've not spent that money, whereas the other companies have. Microsoft, I still like that as a company. It's had great quarters, but it could be that now with the massive spend that they had on building data centers, that the market might be looking at, okay, how did that relate now into the profitability? So I think it's sort of a common theme on how did the spending reflect in their numbers, but then each one I think has a little bit of a different, different nuance depending on what sector they're in.
All right, let's get to some stocks that you want to talk about. Stryker first up. What do you like about that?
Knees and hips.
I know well about those. I got one steel one, and I got a couple more coming probably.
There you go.
I'm a prime candidate for them. Tell me more.
Right. So I think when I look at stuff, especially that supports the aging demographic, I look at it as such a structural theme. Like aging is in place for decades. So these companies, no matter sort of what's going on economically, they're going to benefit from that whole trend. It supports knees and hips. They're a global leader. And I think what makes them quite unique is they have the Mako Smart Robotic, which is actually a robotic arm controlled by a surgeon. So when we look at that as their development and ability to use it, it's being used in orthopedic centers, hospitals, teaching hospitals. So I think that has such a broad-based global tailwind.
Mm-hmm. I'm starting to take some of your selections personally right now. Is it AbbVie? Is that how you pronounce it? AbbVie? AbbVie?
AbbVie.
But there were chronic diseases such as arthritis. What's going on here?
So again, I mean, one thing, and for all the times that I've been on, I tend to select stocks that really support the aging demographic, just because it also is a theme and a number I very much understand, because it's a bit of my area of specialty. So I look at AbbVie and I think at chronic diseases. Arthritis, rheumatoid arthritis, psoriatic arthritis, cancer, degenerative eye diseases. I look at that, and again, that tends to be, sadly, one of the things that increase as we age. So they have great drugs that focus on chronic diseases. And the interesting thing with them right now is that they're one of their drugs, immunology drugs, Humira, it's come off patent. Mm-hmm. They have a replacement called Rinvoq, which has a patent until 2037. So they've done a really good job of replacing what has come off patent with something new. So there's a bit of pricing protection there.
Okay, and we're almost out of time, but let's get the Ensign group in to make me feel completely old.
See, acute care post-op, skilled senior nursing. So again, when we look at that 80-plus aging cohort, both, granted it's an American company, but when we look at this number from a North American perspective, the number is just growing. Again, the theme is in place for decades and decades, that these are services that are just going to increase in demand. And because the skilled labor needed for a lot of these positions, it is slightly declining. We know what happens when there's an increased need and a decrease in supply. We're looking at pricing power, right? Okay. So when I look at all of those themes, when I look at the three rolled up together, yes, it has to do with aging. It just has to do with here's a theme that regardless, for the most part, regardless of what's happening on the market, it's a medical necessity.
Okay. I got to wrap you up.
Structural demand. Okay.
All right. I got to wrap you up there. I have to go to physiotherapy. Neela, thank you very much for joining us.
Thank you for having me.